Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Today is Friday, the 1st of November, and thank you for tuning in. Listen, I'm going to tell you what. It's you guys out there, the working class people. I mean, you get up early in the morning, you head to work, you work all day long, and you can't wait till Friday. You have to get up early, you have to go to bed early. When you get home, you're really tired. You might take your coat off, throw it across the chair, you open up the fridge, see if something's in there, and you got just 30 minutes to watch something. You know? And oftentimes, it's you guys. You guys are the salt of the earth. I'm really appreciative to have you guys in my audience. The world leaders, they're not the ones that are really holding things together. It's you guys. And I'm really honored to have you guys watch my show. Thank you for tuning in. Now we're going to get started this morning. We're going to open up the charts right here, and we're going to take a look. Pujo. And they formed a new company. Now, FCA and Pujo, they formed, and they're the 4th largest automaker on Earth now. This new company that they've just formed. And this could have a little effect upon the financials because of this huge merger. Rumors are true that Fiat Chrysler Automobiles is merging with PSA, the European maker of Peugeot, Citroën, and Opel, and Vauxhall. I remember my grandfather used to have a Vauxhall years and years ago, you know, when I was just a little kid, you know. He had a Vauxhall, I think it was a little station wagon, I think it was black colored, you know. Anyway, there's a big merger going on. So let's take a look at the markets now today and see what's going on here. $18 for silver today, and it's down 7 cents. But you know what? It's only a fluctuation down within its new range it sets for itself, you know. And we can see the price starting to tip up now. We can see it's going along in this new range, and it's not really breaking down below that range. Let's take a look at gold. 1508 today, and we see gold's doing exactly the same thing. It set this new higher range above $1,500, and it's staying there. It's holding it rather well. So that's good news for the precious metals market today. Let's take a look at cryptocurrency and see what it's doing today. We're looking at a market cap of $245.4 billion with 67.5% Bitcoin dominance. And you know what we see here is we see all these coins basically doing the same thing as gold and silver. Bitcoin and cryptocurrencies have went up to a new range, and they're basically holding it up above $9,000 for now. Let's take a look at the Dow Jones Industrial Average today. And it looks like an up day for the Dow. It's up 154 points on the day so far, 27,200. I saw something happen yesterday in the markets that really disturbed me. I saw the U.S. 10-year Treasury. The Treasury yield, it fell over 10 basis points in one day. And to me, this is a signal that there's this, along with what's going on in the repo market and stuff like that. I seen that as a signal. Almost like, you know, I mean, you guys, some of you guys out there are mechanics. What if you heard a funny noise inside your engine when your engine's running? And say, uh-oh, there's a funny noise inside my engine. Well, that's the way with me. I'm like a mechanic for the world's financial system, and I see something that's like, what's that? Something off, and that was a big-time signal, big-time off signal. Something's going on in the markets, you know, and that caused that 10-point drop in the bond yield of the 10-year yesterday. Because, you know, all debt is really priced off of LIBOR and the U.S. 10-year and the LIBOR rate, you know. And by the way, in 26 months from now, they're doing away with LIBOR. Oh my God! What? You know, this is almost like a times table of a timetable. Not times table. Times table, something the kids learn in school. But no, this is almost like a timetable. I'm worried about that because it's like I think it's a massive amounts of money involved in this. Anyway, let's move on now and take a look at the oil price today. It's up 71 cents, $54.89. Let's stretch out over 6 months and take a look and see what it's doing. We see a slight drop in price, but now it's starting to rise just a little bit. You know? There was a crude inventory build by the United States, by the way. You know, this is not going to last forever. The United States became a major oil producer, but it's going to go into decline so fast, it's going to make your eyes spin in your head. That's how fast the United States is going to go into decline as a major oil producer in the upcoming next few years. And you know, those guys over there, those guys over in Saudi Arabia and in Russia and stuff, they can bring it out of the ground so much cheaper. And that's not all. In the United States, when they put in these fracking wells, not only do the wells not last, but the oil that comes out of them costs an awful lot more money to bring it out of the ground. And unless they get a substantially higher oil price, it's not a viable solution. It's as simple as that. And they're going to start declining in the amount of oil America produces substantially over the next few years, or even sooner. Let's move on now and take a look at U.S. Treasuries today. And today we're looking at a little bit of a bounce back, but it's insignificant. On the 10-year, it's not even 1 basis point, you know. And later it could turn the other way later today. I'm going to tell you, we could get a significant. We could actually have a market crash, and not in the distant future. In the next, I'm telling you that the conditions out there, it's like an avalanche ready to happen, and it could be a significant market crash, not just a correction. There's so much pressure built up from the 10 years, over 10 years, like 11 years of low interest rates. It's built up. It's built up debt. It's built up mountains of debt, but that debt is also the money. But at the same time, debt's become our money. It's just a situation that's intolerable. It's over-leveraged the markets and over-leveraged the system. And everything's over-leveraged. It's created these asset bubbles everywhere. And if they all burst simultaneously, we got a mess on our hands. Let's take a look now at U.S. dollar. It's been fluctuating today, but it's still riding along in its range at around 97.30. Okay. Bank of International Settlements and the Fed continue to advance the digital currency agenda. They are desperate right now at this point. I'm going to tell you what. Look for this to be the Fed's next big move and the other central banks on earth. They're going to try to switch all of us over into a digital currency, and they're going to try to get rid of cash. This is the way they're going. And they've known that they're going to do this for a little while now. And this is why these big movements to put up cashless registers in the stores are getting as used to. They're getting as used to what's coming in the very near future, which is a digital dollar. And I've been saying this for a long time on my channel. Now it looks like it's coming much faster. They're going to try to get rid of cash. This is because they know they're going to go to zero interest rate policy. ZIRP, they call it. And, you know, this, I can't see it working for very long, you know. We're heading toward an enormous crisis. Thank you guys for tuning in. And give me a thumbs up. Bye-bye, guys. And you guys have a great weekend, and I'll do a show probably on Sunday. Bye-bye, guys.